The Individuals with Disabilities Education Act was reauthorized and signed into law on December 3, 2004, and the final federal regulations were published on August 14, 2006. After publication of the final federal regulations, the state of Missouri revised state regulations and revised the Compliance Program Review Standards and Indicators Manual and numerous model forms. This presentation, Special Education Finance, is one in a series of trainings to inform the field of the major changes in state and federal regulations and implementing the changes made in the Compliance Standards and Indicators Manual and the state model forms. Resources and handouts for each of the presentations in this series can be found on the Special Education Funds Management website. The Division of Special Education welcomes questions that participants may have after viewing the presentations. Questions can be submitted to the Funds Management section by email or by calling 573-751-0622. We hope you enjoy this series of trainings and find the information useful in your role as an educator, parent, advocate, or other individual interested in the education of children with disabilities. Other topics in this series are discipline for children with disabilities, data collection and reporting overview, the special education process and changes in IDEA, the complaint process, administration of special education, response to intervention, early intervening services, and transition. Hello, my name is Debbie Jurlett, and I'm a supervisor in the Special Education Funds Management section. In this presentation, we will cover various special education finance topics. Let's begin with an overview of the basic funding sources available to school districts. This slide contains the address for Funds Management webpage, our email address, and the main telephone number and fax number for our section. If you aren't sure which staff person you need to talk to, call our main number and you'll be connected to the appropriate person. Or you may email your questions to our web reply address. The primary funding sources for special education are state and local funds. The secondary funding source is federal funds. The LEA receives monies in the state foundation formula labeled Basic Formula State Monies. You do not receive a separate categorical payment for special education, but you still need to determine how much of these state funds are needed to support your special education program each year. LEAs have maintenance of effort requirements in order to receive federal special education funds. I'll be discussing maintenance of effort later in this presentation. IDEA Section 611, otherwise known as Part B entitlement funds, are the federal funds the LEA receives to help support their special education program. Each year, DESE calculates an allocation for each LEA. IDEA 2004 requires that calculation to be based on three components. A base amount, sometimes referred to as the hold harmless amount. This is an amount that will remain constant each year. Any funds remaining above the base amount are allocated based on two separate calculations. 85% of the remaining amount is calculated on the basis of enrolled children in public and private elementary and secondary schools, and 15% of the remaining amount is allocated on the number of children in poverty as defined by the state agency. In Missouri, this measure is the number of free and reduced lunch children. LEAs request their Part B funds by completing a Part B web application and an online assurance statement by the deadline set each year. LEAs will receive payments each month. Those payments are coded with Revenue Code 5441 on School Finance's monthly payment transmittal. An estimated final expenditure report, or FER, is due by May 15th, and any changes to the estimated FER need to be reported on a revised FER no later than July 30th. Part B has several requirements that will be covered in detail during this presentation. The LEA must provide assurances to the state education agency that they will comply with all the requirements of IDEA. There's a maintenance of effort and excess cost requirement in order to receive these funds. Federal funds must be used to supplement and not supplant funds for the LEA's special education program, And there's a proportionate share requirement that requires LEAs to spend a calculated amount of their Part B funds on parentally placed private school children with disabilities. Let's start with the assurance statement requirement. An assurance statement must be completed and approved before DESE can release federal funds to the LEA. These assurances must be approved any time prior to the submission of your special education Part B application. You do not need to send a hard copy of the approved assurance statement to DESE, but the LEA must keep a copy on file. At the time you submit your Part B budget application, the individual submitting the application will need to confirm on the opening budget page that the assurances have been approved by the LEA's Board of Education. The Special Education Compliance section has additional information and forms on their webpage if you have specific questions about compliance plans and the assurances. In order for LEAs to be eligible for federal special education funds, they must meet the maintenance of effort requirement. The maintenance of effort requirement is defined as the following. LEAs must spend the same amount or more as it did in the previous year from either local only or the combination of local and state funds. Maintenance of effort may be calculated on a total amount of expenditures or on a per capita or per child amount. You should be aware that maintenance of effort is a two-part process. At the beginning of the year, the LEA must budget at least as much as was expended in the prior year to receive federal funds in the current year. At the end of the year, the district must have spent the same amount or more as compared to the prior year. It is important that LEAs budget carefully each year. LEAs must spend at least as much local or the combination of state and local funds according to the budget they provided to demonstrate they would meet the maintenance of effort requirements. When LEAs calculate maintenance of effort, they should not include federal funds in their maintenance of effort calculation. Some examples of special education federal funds include Part B entitlement, which can be identified on the monthly state aid transmittal with revenue code 5441, the federal portion of early childhood special education reimbursement, coded with revenue code 5442, Medicaid funds, revenue code 5412, and the federal portion of the high need fund, revenue code 5441. Beginning with the FY07 audit, your independent auditor is directed to specifically look at and make a statement in the audit as to whether or not the LEA met maintenance of effort requirements. The Funds Management website has a worksheet and instructions for computing maintenance of effort. This form is helpful in capturing all special education expenditures. Remember, exclude any expenditure paid from federal funds as you're trying to prove that you're spending the same amount from either local only or the combination of state and local funds. Please keep documentation of the maintenance of effort calculation since the LEA will need this information for audit purposes. The next two slides show the instructions and worksheet for maintenance of effort that can be found on the Special Education Funds Management website. Here's page 1 of the maintenance of effort instructions. These instructions will assist you as you work through the maintenance of effort worksheet. This is what the maintenance of effort worksheet looks like. We have an Excel version of the worksheet on our web page, which will calculate sum totals for you. The next couple of slides have some examples of how LEAs can meet maintenance of effort requirements. Let's start with example number 1. In this example, McKinley LEA spent $100,000 from local funds and $900,000 in combined state and local funds in the prior year, or FY06. In order to be in compliance with the maintenance of effort requirement, the LEA must spend in FY07 at least $100,000 in local-only funds or $900,000 in combined state and local funds. In this example, McKinley LEA actually spent $97,000 in local funds, which if they were trying to meet maintenance of effort on the basis of local funds only, they would not have met the maintenance of effort requirement, since in the prior year they expended $100,000 in local funds. However, they did meet maintenance of effort using the combination of state and local funds since they spent $905,000, which is greater than the $900,000 expended in fiscal year 06. In example number 2, Harrison LEA spent a total of $100,000 in local funds and $900,000 from a combination of state and local funds in fiscal year 06. In FY07, this LEA experienced a significant drop in child count. Because the LEA had a significant drop in child count, they may find that meeting the maintenance of effort requirement on a per-child basis is a better option. The next slide will show how to calculate maintenance of effort on a per-child basis. In this example, we're calculating a per capita or per-child amount for both the local only and the combination of local and state funds. To calculate a per-child amount for local-only funds, you would simply take the total amount expended in fiscal year 06 and divide by the December 1, 2005 child count. In this case, it's $100,000 divided by 150, which results in a per-child amount of $667. To calculate a per-child amount for the combination of state and local-only funds, you again take the total amount expended and divide by the December 1 child count of that same year. In this case, it's $900,000 divided by 150, which results in a per-child amount of $6,000. Now, to determine the total minimum amount the district would have to spend in the next fiscal year, you would multiply the current child count of 130 by the rates calculated on this slide. The next slide shows the minimum amount the district would need to spend from either local only or again the combination of state and local funds. On this slide, we're using the per-child calculation from the prior slide. This shows the amount of funds needed to meet maintenance of effort in fiscal year 07. Remember, the LEA's child count in FY06 was 150, but in FY07 it dropped to 130. As you can see in the box on the left side of the screen, the LEA must spend in total local funds at least $86,710 or $780,000 from the combination of state and local funds. The local-only total was determined by multiplying the per-child rate of $667 by the December 1 child count of 130. The combination of state and local funds total used the $6,000 per child rate and was multiplied by the child count of 130. As you can see in the box on the right-hand side of the screen, the LEA actually spent $80,000 in local funds, which falls short of the $86,710 required to spend. However, by using the combination of state and local funds, they met maintenance of effort since they were required to spend a minimum of $780,000 and they instead spent $800,000. Remember that you have these options when meeting the maintenance of effort requirement, but also remember you must compare the same source of funds from year to year to demonstrate compliance with maintenance of effort. IDEA does permit some allowable exceptions when an LEA cannot meet maintenance of effort. Let's go over the list and I'll provide some examples of how it may apply to some particular situations. Number 1, the voluntary departure of special education staff. If you had a teacher retire and they were replaced with a lower paid teacher, you can claim the difference in salary and benefits paid from state or local funds. If you are using local only in your calculation of maintenance of effort, be sure and only claim the difference in local funds. Number 2, decrease in enrollment of children with disabilities. An LEA experienced a significant drop in the number of students with disabilities from one year to the next. This LEA may want to consider calculating maintenance of effort on a per-child basis as shown in example number 2. Number 3, the termination of a costly obligation for a specific child because the child has left the jurisdiction of the LEA or no longer needs the program of special education. A district had a child placed in a private agency and that child moved. Those costs associated with that child may be used to reduce maintenance of effort. Number 4, the termination of a costly long-term purchase such as the acquisition of equipment or construction of school facilities. Number 5, assumption of the cost by the High Need Fund. Districts may reduce their maintenance of effort by the amount previously expended from state and or local funds that now qualifies for reimbursement through the state-operated fund. The state-operated fund in Missouri is called the High Need Fund. The LEA would only claim as a reduction the federal amount received from the state. IDEA permits LEAs to reduce their maintenance of effort by 50% of their new money or the increase in entitlement amount. However, the LEA must use an amount of local funds equal to the reduction for activities that could be supported with funds under the Elementary and Secondary Education Act or the No Child Left Behind. We'll go through a couple of examples later in this presentation to explain how to calculate the new money. Maintenance of effort adjustments and early intervening services are interconnected. If the state education agency determines that an LEA is unable to establish and maintain FAPE, or if the SEA has taken action against the LEA under Section 616 of the Act and Subpart F of the regulations, the SEA must prohibit the LEA from reducing the level of expenditures for that fiscal year. LEAs may use up to 15% of their Part B entitlement for early intervening services, or EIS, to students in kindergarten through grade 12 who have not been identified as needing special education services but are in need of additional academic and behavioral supports to succeed in the general education environment. The federal regulations recommend particular emphasis on students in kindergarten through third grade. Again, LEAs may use 15% of their Part B allocation for EIS. However, there are limitations tied to maintenance of effort. The intent of early intervening services is to intervene early and keep the child out of special education. Funding may be used for, number one, professional development for teachers and other staff. Professional development may be provided by entities other than LEAs and should be directed toward enabling personnel to deliver scientifically based literacy instruction and, where appropriate, instruction on the use of adaptive and instructional software. Number two, funding may also be used for services prior to the child being identified, or three, scientifically based literacy instruction. Funding may not be used for placement in special education classrooms or instruction by special education teachers prior to identification. Early intervening services are not intended to create a right to a free appropriate public education, or FAPE, under Part B, or to delay evaluation of a child suspected of having a disability. The activities associated with EIS may be coordinated with existing No Child Left Behind funded activities. However, they can only be used to supplement and not supplant the funds made available under the Elementary and Secondary Education Act. Let's go over some examples of how the maintenance of effort adjustment and EIS decisions impact each other. In this example, the LEA has a current year entitlement of $1 million. Their prior year entitlement was $900,000, which is an increase of $100,000. This $100,000 is referred to as the new money. Remember that only 50% of the new money can be used for the maintenance of effort adjustment, so this LEA's 50% is $50,000. Also, the maximum amount the LEA may use for EIS is 15%, or in this example, $150,000. In this example, if the district chooses to use an amount between $50,000 and $150,000 for EIS, they may not reduce maintenance of effort, since the maximum amount of maintenance of effort reduction is $50,000. If the district chooses to use $30,000 for EIS, it has $20,000 remaining to reduce maintenance of effort. $50,000 maximum maintenance of effort reduction minus $30,000 the LEA is using for EIS equals $20,000 maximum maintenance of effort reduction. If the district does not spend any of the allowable funds for EIS, they may reduce maintenance of effort by the full $50,000. In this example, the LEA has a current year entitlement of $2 million. Their prior year entitlement was $1 million, which is an increase of $1 million. The maximum amount for maintenance of effort reduction is $500,000, and the maximum amount that can be used for early intervening services is $300,000. If the LEA chooses to use no funds for maintenance of effort reduction, it may set aside the maximum of $300,000 for EIS, since they do not intend to use any funds for maintenance of effort reduction. If the LEA chooses to use no funds for EIS, they may use the maximum $500,000 for maintenance of effort reduction. If the LEA chooses to use $100,000 for maintenance of effort reduction, it may only use $200,000 for EIS, since the maximum amount for EIS in this example is $300,000. I'd like to point out that any reduction your LEA is allowed to make in maintenance of effort, either by the adjustments to maintenance of effort or the maintenance of effort exceptions, will reduce the level of expenditure that an LEA must make for special education in subsequent years. Also, early intervening services may reduce the number of children who need special education in the future, thus reducing future increased costs. Another requirement for receiving federal special education funds is the excess cost requirement. Federal funds may only be used to pay the excess costs of providing special education and related services to children with disabilities. LEAs must document that children receiving special education services cost more than those in regular education. Beginning with the FY07 independent audit, the LEA auditors will make a statement in the audit as to whether or not the LEA maintains a copy of the excess cost calculation. An example of the excess cost calculation is in Appendix A of the IDEA regulations. We have developed a form based on this example in the regulations, and it's posted on the Funds Management website. The next slide shows our form. You should complete this worksheet prior to the beginning of each school year. This will document the minimum amount of state and local funds that must be spent on children with disabilities before using federal funds. Use the preceding year data when completing the worksheet. Expenditures must be separated by elementary and secondary according to IDEA regulations. The completed form and supporting documentation must be maintained on file for 5 years and available for audit purposes. Here's the verification of excess cost form posted on the Funds Management website. This worksheet was designed to perform some auto calculations. Remember to separate the elementary and secondary costs. The LEA calculation will indicate the minimum amount the LEA must spend on children with disabilities before using Part B federal funds. The final topic I will be discussing in this presentation is the proportionate share requirement. Proportionate share is the amount of Part B funds an LEA must spend on parentally placed children in private schools with disabilities. LEAs receive a portion of their Part B fund calculation based on the count of their private school children reported in core data. One significant change in IDEA is the district where the private school is located is responsible for the proportionate share requirement. IDEA requires that each LEA must locate, identify, and evaluate all children with disabilities who are enrolled by their parents in private schools, including religious schools located in their district. According to IDEA 2004, each LEA must spend an amount that is the same proportion of the LEA's total subgrant under Section 611F, providing special education and related services, including direct services, to parentally placed private school children with disabilities for children aged 3 through 21. Children aged 3 through 5 are considered to be parentally placed private school children if they are enrolled in a private school that meets the definition of elementary school in 300.13. In Missouri, an elementary school is defined as a nonprofit institutional day or residential school, including a public elementary charter school that provides elementary education for kindergarten through 8th grade. Therefore, in Missouri, private preschool children are not considered under the proportionate share rule. LEAs should calculate their proportionate share amount by June 30th of each year or before using current year data. According to regulations, LEAs must calculate proportionate share using a count of eligible students conducted on any date between October 1st and December 1st inclusive of each year. An example is if an LEA is calculating proportionate share for June 30th, 2007, they will be using data from the 2006-2007 school year. Here's a copy of the instructions and information used in calculating proportionate share that is posted on our website. And here's a worksheet that can be used when performing the calculation. This worksheet is also posted on our Funds Management website. We have the worksheet set up to calculate and pre-populate some of the cells. This slide shows an example of a proportionate share calculation. In this example, the LEA had 300 eligible children with disabilities in the public school and 20 eligible children with disabilities in the private school for a total of 320 children that must be used in the calculation. This LEA had an allocation of $152,500 in Part B funds. The amount per child is determined by dividing the Part B allocation by the 320 eligible children. In this case, the amount per student is $476.57. Multiply the amount per student, which is the $476.57, by the 20 eligible private school children, and this LEA's proportionate share obligation is $9,531.25. If a LEA doesn't have any eligible private school students when they conduct their count between October and December, the proportionate share calculation will be zero, and the district will not be required to spend any Part B monies on proportionate share services the following school year, even if they've received transfer students or identify new students through evaluations. State and local funds may supplement but not supplant the Part B federal funds for this population. In other words, the amount of proportionate share must come from Part B funds, and the LEA may supplement with state or local funds. Also, the cost of child find may not be considered in the proportionate share obligation. If an LEA has not expended all of their calculated proportionate share funds by the end of the fiscal year for which Congress appropriated the funds, they must obligate the remaining funds for special education and related services to parentally placed private school students with disabilities during a carryover period of one additional year. If the funds are not spent during the rollover year, they would revert back to the state education agency. If LEAs are unable to spend all of their proportionate share monies, they might need to consider increasing the level and type of services they are providing for private school students, which would be discussed as part of the consultation meeting. And now Shelley Witherby will take you through some other special education funding sources.
Hello, my name is Shelley Witherby. I am a supervisor in the Funds Management section at the Division of Special Education. While Debbie Drillette covered the basic, more typical types of special education funding, I will be covering additional funding sources that are a little less common. We will be covering 3 types of additional funding sources available to school districts: local tax effort, also known as Billbacks, Medicaid, and special purpose funds. The special purpose funds include the High Need Fund and the Public Placement Fund. The first topic we will cover is local tax effort. According to Section 167.126 of the Revised Missouri State Statutes, a school district which is not a special school district shall pay an amount equal to the average sum produced per child by the local tax effort of the district of domicile. This is a statutory requirement. Basically, local tax effort is a local revenue source for all school districts comprised of property taxes, intangible taxes, M&M surtaxes, in lieu of taxes, and city sales tax. The calculation for this funding is based on the number of students whose parents reside in the district. This rate is different for each school district and may be found on the school finance website. Local tax effort billback is applicable when a district is educating a non-domicile student. Non-domicile means the parents or legal guardian live in a school district outside of the serving or educating school district. Since the non-serving district is receiving the LTE revenue for that student, it is not only appropriate but required by statute to send that revenue on to the district providing educational services. Districts may bill the domicile district for this revenue if educating a non-domicile student. However, this works both ways. Your district may also receive a bill from an outside district if they are serving one of your students. For example, if Columbia was serving a Jefferson City student, Columbia would bill Jefferson City for the local tax effort amount. Columbia would be sending the bill, Jefferson City would be paying it. How does a district bill back? The first step is to determine the domicile district. This may be done through the Children's Division Office, court records, or enrollment records that transferred with the student. Once the domicile district is established, the local tax effort rate must be determined for that district. This rate may be found on the School Finance webpage. It is important to distinguish between the local tax effort rate and the local tax effort amount. The rate is established by School Finance. The calculated amount, which is based on the rate, is what is billed to the serving school district. After finding the posted rate on School Finance webpage, the district will need to calculate the local tax effort amount to bill the domicile district, which is shown on the next slide. The invoice may be submitted to the domicile district after these steps are completed. The domicile district is required by statute to pay the district billback for local effort within 90 days. If the district billback for local effort invoice is not paid within 90 days, the district may ask DESE to intervene and determine through an investigation if the local tax effort amount is owed. Local tax effort amounts are based on days of attendance. It is calculated by taking the local tax effort rate divided by calendar days and then multiplied by the attendance days of the student. The calculation on this slide uses 174 days because this is the state minimum calendar days. The district may choose to use the actual number of calendar days of the domicile district if they wish. In the example on the slide, the local tax effort rate is $5,032. However, based on the student attendance, the local tax effort amount to be billed is only $2,805. Again, this was calculated by taking the local tax effort rate of $5,032 divided by 174 and multiplied by the student attendance. There will be certain situations when school districts may not bill the domicile district for local tax effort. They are if the parental rights have been terminated, if the student is orphaned, if the parents or legal guardians are incarcerated, if the parents or legal guardians live out of the state, if the domicile information is truly unknown or untraceable, or if the student is placed with family members in the district. In these situations, districts may not bill back. The state schools for the severely handicapped will bill local tax effort for all students, both domicile and non-domicile. There is a separate statute that allows them to bill for all students. For more information about local tax effort, visit the Funds Management website. The next funding source we will cover is Medicaid. Due to Senate Bill 577, Medicaid will be called Missouri HealthNet effective September 1st, 2007. Missouri HealthNet is a health insurance program that is federally funded for people below the 300% poverty level. In Missouri, school-based services that are reimbursable through Missouri HealthNet are occupational, speech, and physical therapy that are directed by the IEP. Districts must enroll as a Missouri HealthNet provider in order to bill for therapy services. The district will be assigned a billing provider number. In addition, each individual therapist employed by the district must enroll as a Missouri HealthNet provider. The therapist will be assigned a performing provider number. Both of these numbers will be needed in order to submit a Medicaid claim. Section 300.9 of IDEA, as reauthorized in 2004, requires written parental consent before billing Missouri HealthNet for any therapy services. A physician's script must also be obtained prescribing the therapy as indicated in the IEP. For more information about Missouri HealthNet and the billing process, please visit the Funds Management Missouri HealthNet website. There is also a step-by-step billing presentation on this webpage. The last additional funding source we will cover are special purpose funds, which includes the High Need Fund and Public Placement Fund. We'll start with the High Need Fund. This fund was established under Senate Bill 287 to create a safety net for school districts educating any student with a disability, regardless of placement, whose educational costs exceed 3 times the current expenditure per average daily attendance, also known as the current expenditure per ADA. The current expenditure per ADA amount is calculated by School Finance from the annual Secretary of the Board report also called the ASBR. This amount basically takes all of the district's expenditures divided by the average daily attendance for all students. The outcome of this calculation is considered to be the average cost of educating a student in the district. It is the district's responsibility to meet the 3 times amount in educational costs for each eligible student. DESE will pay for all costs exceeding 3 times based on the available appropriation. Students that districts may want to target for the fund include students who have previously been eligible for the Sensory Impaired Fund, Extraordinary Cost Fund, Severe Disability Services Fund, and Severely Handicapped Contractual Placement Reimbursement. Students in contractual placements, students with a personal aide or private nurse, and students with a large amount of related services. The formula used under the High Need Fund takes the educational cost of the student minus 3 times the current expenditure per ADA amount. The outcome is the district reimbursement from the fund. The district is able to use federal, state, and local revenues to help them meet the 3 times amount. Payment for the High Need Fund is made the following fiscal year in which services were provided. In the example on the slide, the current expenditure per ADA is $6,500. 3 times this amount is $19,500. The district would be responsible for paying educational costs up to this amount for the student. If the educational cost totaled $80,600, the formula would take this amount and subtract the $19,500. This comes out to $60,500, in which the district would be eligible for reimbursement under the High Need Fund. The application is very simple to complete. There is one application form for all eligible students. The district completes the white areas, while the gray shaded areas automatically calculate. There are 5 categories of costs to track, which are described in the following slide. The costs that may be claimed under the High Need Fund include instructional costs, IEP-related services, transportation, contracted services and/or tuition, assistive technology, and other costs associated with the education. The district will need to track these costs throughout the year for eligible students in order to complete the application. Funding from the IDEA risk pool may not be used to support the following: pay legal fees, court costs, or other costs associated with a cause of action brought on behalf of a child with a disability to ensure FAPE, or pay costs that otherwise would be reimbursed as medical assistance for a child with a disability under the state Medicaid program. The application is due January 15th following the year in which services were provided. This date ensures that the ASBR from the prior fiscal year has been completed, which allows for an accurate calculation of the current expenditure per ADA. Districts are required to maintain all expenditure documentation for reimbursement requests under the High Need Fund for 3 years after the due date of the application. For more information about the High Need Fund, visit the Funds Management website. The other special purpose fund is called Excess Costs for Public Placement, commonly referred to as just the Public Placement Fund. This fund is for both IEP and non-IEP students placed within a non-domiciled district by DFS, DMH, DYS, or a court of competent jurisdiction, whose educational costs exceed the revenues received by the district. So basically, students eligible for this fund must meet these conditions. They have to be educated in a non-domiciled district. They were placed in the district by DFS, DYS, DMH, or a court of competent jurisdiction. And the educational costs must exceed the revenues received for these students. The application calculates the reimbursement by taking the educational costs minus the revenues received by the district. In some cases, the district receives enough revenues to cover the cost of educating these students, therefore does not receive any reimbursement on the Public Placement Fund. Payment is made the following fiscal year in which services were provided. The district completes an application for all eligible students. The district must provide the following information on the student in order to complete the PPF application: placing agency, student name, if the student had an IEP, the school setting in which services were provided, the enrollment dates, local tax effort and domicile information, the attendance days for the student, and whether or not the student received district transportation. The revenue section of the application includes basic state aid, local tax effort, transportation state aid, and Part B entitlement. These are calculated based on the student information entered on the student worksheet. The application breaks down costs by the type of educational setting. Students being served in regular and special education classrooms along with other domiciled students are categorized under option A. Students being served in a district-operated separate classroom and/or program are categorized under option B. Students being served in a contractual placement are categorized under option C. The Public Placement Fund application is due October 15th following the year in which services were provided. For more information about the Public Placement Fund, visit the Funds Management website. This has been an overview of special education funding. If you have any questions regarding the information presented today, please contact us. Thank you.